Hi guys, today I will be taking a quick video. Let me turn my screen like this on financial planning, right? On how can we do financial planning. Very simply, I'll be making a short video on my iPad itself, just a quick note share here. And this is for people with few assumptions. First, there is no generational wealth. No generational wealth. So, generational wealth is a no, right? And here we are not aiming for some, Mercedes or Porsche kind of lifestyle. We are going for the most essential things, in my opinion. Again, there are many videos regarding financial independence, which you can even find on Instagram reels, rather than going for almost this video, according to me, is going to be half an hour. So, if this is just my take or my perspective on how we are going to deal with the situation. Right. So, what are the two main goals everyone should have, in my opinion, when it comes to financial independence? One is retirement fund. Retirement fund, right? This is there. Let me see if I can go for, I think this pen is good only. And the other one will be a house plus car. So there is a saying in Hindi, sorry, that's my native, my birth language, roti, kapda, makan. Roti is food, kapda is your clothes or, basic necessity it comes under, and a house. So, these are basic, and car I'm including because with the coming time that will probably become a necessity, logistics and transport. Right. So these are the two major components which we want in today's term with respect to inflation. We want to adjust it with respect to inflation. Right. Yeah. Makes sense. Makes sense. Right. Now let us decide how much should the retirement fund be. In US, what we say is 4% rule. In India, there is a video I think by Zerodha also. I'm not sure which one made it, or Sharon 1% Club. But then in India, this is the 5% rule of what do you say, of your corpus should be spent every year. And I take the corpus to be 20 years. Whenever you want to retire to your predicted age, let's say in India right now, average age is 64 lifespan, right? But I am assuming that let's say you live till 84, right? Let's take it on the higher average. So let's say you retire at 62 after an extension. So approximately 20 years of you can say lifespan you want to cater for. So this retirement plan which I'm making is actually for 20 years from now, and this is with the assumption you don't have any generational wealth and your current income right now at this very moment is 1 lakh per month in hand, salary, which means your CTC would be anywhere between 14.5 to 15.5. Okay, sorry, that was a LinkedIn notification. So this is basically for the 1 lakh of for a 1 lakh uh, bracket. This would be your uh, in hand salary. Now, so this is the big assumption that I'm taking only for these people, or this bracket of people I'll be making the video for. And how many years do we want for our retirement or to achieve our main goals? I have taken 21 years in this for the purpose of this planning, and this is going to be to achieve, this is to achieve, and 20 years to last. Okay, this is to last. We have 20 years, 21 years to achieve. So this is basically the two time frames that we have, and I have given an explanation here. What is my rationale? This is just my perspective, but yeah. So how do we do this? Now let's say you want 20 years of your span, and let's say your spending is about 50K a month. This I'm doing individual planning. I'm assuming I'm not taking your spouse or your partner's wealth into picture, or your kids or anything. I'm just taking, this is for an individual level. Okay, okay. So 50K per month into 12. I'm using the into symbol. Sorry, this is because of programming. I'm kind of accustomed to. This is about 6 lakh into 20 years. That's about 1.2 cr in today's term. I need a house, a 2 bhk house, let's take it, in a good tier 2 city, decent area, not posh area but a decent area in T30 cities. T30 cities. In this, I'm not including Bangalore, Mumbai, Hyderabad, Delhi, that to the expensive Delhi. If you do want these cities, then maybe in the most outskirts of the place. I'm talking about like very outskirts almost. Then the figure will come around 50 lakh plus 10 lakh for registration and basic interior. So let's just take it as 0.6 cr. So we have a total of 1.8 cr. Okay. And for medical emergencies, let's just take point 0.2 for now. I'll explain. We'll still have insurance, but just for the sake, or rather, you can take this 0.2 cr for car plus miscellaneous, right? Now I'm not including any wedding or all those planning. So now you have 2 cr figure. So let me see if we have a clear all option. Okay, I'll just go down then. So now we have the 2 cr option. Now we have 2 crores figure that we want to achieve. So 2 crore, let's say today is the year you decide in 2025. Now achievement year in is what? 2046. Now I don't know what age you are. The only assumption that is required is your salary is 1 lakh per year in hand. In hand. This is the only condition required. This is the prerequisite. Okay. Prerequisite. And just so that there's no confusion, I will remove this 2 cr from here, and let me just put it there. Okay, now this figure, now there is a formula. If any finance guy is here, they will know 1.0718 is what I have taken, whole raised to power 21 is what we use for compound interest. If you want to know how I got this formula, it is 1 plus interest rate whole raised to power n. This is the compound interest formula. Okay, compound interest formula. How compounding happens. And why have I taken this figure, which is 7.18%, is assumed inflation. If you want to really maintain lifestyle. Okay, so it's set 6 or it is set 5. Let's be honest, it's about this. And in 21 years, if I'm not wrong, if I just use a simple calculator, I can also do it on my iPad, but it might take a bit more long. So I'm doing it on my phone and then telling you the figure. It's 4.289. So I'll just call it 4.29. Okay, rounding it off to. This is the x multiple. So this x into 2, let's multiply. Right. So 8.58 is the figure which you will need after 21 years. If everything, this is only with respect to India. So you need 8.58 crore. Right. So what should be the, sorry for so many notifications. I'm sorry I didn't turn it off. Now, how much is the SIP amount that you are required to keep? Now, of course, there are certain things I've not considered. If you're a salaried employee, you have things like EPF, okay, you don't have GPF. That's for government employees. You have gratuity, EPF plus gratuity plus some benefits or perks, which depending on the company, like stocks or all you'll have, like stocks maybe, I don't know. So these I've not included. But still, on a basic level, according to me, what should be the SIP? Now, there are 2 apps which I suggest. Let me show it if I can in my finance. So this is the app which I use. This is basically the app which I use. If you can see, this is by RK Apps. You can, the Play Store version without the ads, it's about 100 rupees. It's brilliant, go for it. Or you can also download it in the Apple Store. It's quite useful. So you know what, let me just do my calculation here itself. I'm not sure if it shows for SIP here in the Apple version. Okay, it does. So okay, but it does not have the So the Android version sadly has the calculator. Here we do not have a calculator, I think. Yeah, we do not have that, sadly. Okay, but you can at least read about financial stuff here. So I'll, no issues, I will do that for you. I will basically create, wait, if I have anything open. How do you open the apps? No, it's not there. Fine. Okay, not an issue, not an issue, guys. Let me do one thing. I will then multiply it in my mobile app on Play Store. I have Samsung phone too, Samsung all the way. We will go for an SIP. There are SIP planner, SIP dot in the many websites, don't worry. And for now, just to start with, let me say 36,000 rupees per month with an expected return. So returns, always remember the formula, future value formula. It is dependent proportionally to your rate of interest I, comma, your time period. Now here we have fixed it, so that we are not going to consider. So only interest as well as the amount, which is the amount of SIP. Only these two are the factors that we can change, right? So let us just go with 36,000, since that's about 36% of your enhanced salary. That's a difficult feat, but I always tell, in India we are not as lucky as Americans. See, I will tell something before I move in. One second. Before I move in, let me say, in most of the European, in most of the European, in most of the European Union, EU countries, basically EU plus US, you have the state taking care of something or the other. In India, if you think about it, the state does not, it's not equal to, it's not equal to Indian state, right? Here you have uh, public health to some extent. I won't say there are not issues here. You have public health, you have education. At least in EU you have public education. In India you don't have concept. Even government school do charge you a good amount of fees, and not everyone can get in unless you have sources. Plus, if you go for hospital, I mean, private hospitalization is beautiful, but government hospitals are, well, I don't need to tell you something about that if an Indian is watching here. So then this is not the same. See, again, this is please forgive my ignorance. There are, of course, exceptions on both the sides, but I'm talking on a very broad level, right? So how do we tackle this? How, that means we as Indians have to take care of our own. Sorry. Oh, I think I closed it. Of our own insurance. We have to take care of our own wealth management and retirement, and we have to do many other things. Okay, we are responsible for it. So this is what the video is all about. Now, as I said, in if you see all these American journals of personal finance, personal finance, PF is not the provident fund we are saying. So, or rather, I'll write personal finance. Okay, here the rule is 20% saving rule. For India, I don't think this is valid. For us, I think the figure should be 33.33, like one third or above. It should be more than that. Okay, so for now I have taken 36,000 for the enhanced salary, and I'm sorry for my battery too, and we will increase this a percentage with the inflation. 7.18 is what I've taken. So 36k of SIP. Step up is about 7.18, the same as inflation. And expected returns I is equal to about, what I have taken it to be is about 13.55%, which is possible with index if it's 20 years term what I'm taking, plus one good nice flexi cap, or some kind of good fund, if you can find it. Now that is a difficult thing, but if you research well, this is possible, or it has been possible till now at least. This is based on past returns, obviously. So if you take that into picture and you go for 21 years of terms, the maturity amount comes out to be about sadly it's a little short of our goal. So the maturity amount is about 7.378 crore. But how much do we want? 8.58. So this is slightly short. So can we do this for 40k? Let me see. So if we do for 40k, now for 40k, the maturity amount MA, let's just call it MA, will be 8.19 crore. Still short. Can we go for 45 then? Let's go for 45 then. That's, yes, 45k does the deal. Then the maturity amount is about 9.21 crore. Very comfortably you can retire. So that's a good margin. So either we can have a amount of 45k, or if you can somehow get good mutual fund returns of even by 1%. So this was on assumption, all these are on the assumptions of 13.55 is what I've taken. If now I go for the same 36,000 at in the same step up but 14.55, I've just increased the amount by 1. So for 36k per month, MA is about 8.24 CR. Okay, we have almost achieved the goal in 36 only. Then if I do 40, then 9.16 CR. That is what was for 45. We have already achieved in 40k per month in MA. And for 45k a month, the last one for MA maturity amount, I'll just change it and I'll tell you, because it's about 10.31 CR. So this is for 14.55. Only a 1% difference. This is only 1% difference does this much of damage basically. So either you increase your amount, okay, or you increase your interest rate. Okay, one of the other two, because the time period will not remain. So proportionality rule, if you're familiar with the at least a higher grade of mathematics, say 12th standard mathematics, you'll understand what I'm saying. Now you might ask me, then what can we do? Let me use a rubber, okay, and rub these things off. Anyway, it's in the same note, but the point doesn't change. Now what can we do, you might ask them. Let's take it in the middle ground. If you take middle ground, that is increasing 0.5%, then you have to increase the amount in the middle, but that is possible. So in 36,000 only, if you can achieve, as you saw, wait, my bad, in 36,000 only, if you saw, you can almost achieve the goal for 14.55. Let us say that with a good flexi cap and a good Nifty 50 or Nifty 500 fund for 21 years, we will be able to get 14% of XIRR for us, right? So if we go for 14%, in the middle ground, let me be very honest, then you can get 8.61 minus of course some charges and all, and abhi I'm not familiar, so minus some charges, let's say, and you get your exact amount of 8.58 CR. For that, this is the target achieved. How? When you have basically done 40k SIP, step up 7.18%, step up each year, okay, for 21 years, then you achieve your goal. Okay, this is a fact. And this, I'm assuming, will be the increment in salary or the growth in business that you will be having. If only you can achieve it, then only it is possible. And 40K for a 1 lakh salary is 40% of in hand. So these are not very easy to do. Okay. So now you might ask, but Shivanshu, we must also have something known as EPF. You have totally forgotten the retirement benefits that we are getting as salaried employer. If you're in business, probably taxes and all you can save and have some extra liquid which you might be putting in PPF. What about that? So that EPF and PPF are what I like to call in India. We have something known as Big Brother, right? So I like to call them the Big Brother fund. They are for emergencies. They are not for just goals. They are when you remember your family members when you're in need, right? It's basically like that. When shit has hit the fan, when you're in your absolute lowest, right? That's when you touch that fund, basically, like medical emergencies and all. You just want liquidity, then that's when you touch it. So that's why I have not yet. If you want to maintain a good upper middle class lifestyle, or even a comfortable, this is not, by the way, all this financial plan is not for the rich class or for someone who wants to have a luxurious. This is for a comfortable lifestyle. Definitely comfortable, but not ultra luxurious. Okay. Now, this plan achieves both. So in 8.58 crore, at the end of whatever age you start, let's say you start this plan at the age of 39 years old, you will be done by in 21, 40, 50, 60. 60 years you can retire. Until 80 years this fund will last you, basically, in my opinion. So till your end of lifespan, this is my goal. And if you start earlier, let's say 24, that's my age, by the way, then you can retire faster, maybe at 45 and 50. And for that extra 5 years that you're putting into the picture, your money will basically never run out. That magic, if you want to see how I got that never running out one, that is a separate video altogether. I cannot cover everything in 30 minutes for that. But basically, someone starting at 39 also can achieve this goal. Basically, that was my point of saying. And uh, and at 39, whether you're in corporate, even if you're not in pure IT, I think it's not easy. I'm not going to say that only less than 10% of people earn more than 40K a month in India, right? According to ITR data. So for salaried employees, of course, I know it's not going to be easy, but it is possible with more number of years of experience. Especially, I have taken the bracket max age should be 39, because by 39 you should start this plan so that by 60 you can retire. Okay. So now you have all these things explained. Now in this 8.58 crore, your retirement fund for 20 years, right? From 60 to 80 or whatever it is, 20 years is fixed. Okay, now this fund you put when you retire at, let's say, at 60, you put this whole money in FD. And basically, FD will not give you any extra rate of return, because even if you're getting 9%, of course, if you leave your job and you're not earning anything on top of it, then in India, even at that time, of course, the tax rate will also increase. So I don't think there should be any taxation, because right now the limit is about 12.75 lakh, no tax. Right. So for 9 or 10% to make that, you need 1.2 crore. So in the coming years, I'm pretty sure this limit will also increase. So let's say 10% of, say, half the amount. That is, how much have I taken for retirement? 1.2, right? So the FD return basically will not. What I want to say, the point of the story is this 9% minus, not tax, but minus charges and basic tax. Let's say if the amount is too high, will still be equal to inflation. It won't be below inflation. Why am I saying inflation is important? Is because let me or wait, let me go down a bit. Okay. Now see, sorry. Now 50,000. My bad. No, not this. Sorry. Now 50,000 this year. So I have 50K now with me. Next year, if the inflation is about 7%, 7 5 is 3,500. So this will be 53.5K. I just did a bit of mental math. I multiplied 7 into 5. I mean, anyway, I don't want to explain that. But this will be 50 3.5k. If in 2046 I retire, in 2047 my monthly expense from 53 to cover inflation, which is about 7.2%, will be 53 point, let me write it properly, will be 53.5k, right? So, and then next year it will be furthermore compounded, like how we were doing compounding and so on and so forth, right? So the FD basically is not increasing your money or anything. It is basically so that you are able to take out the money with respect to inflation and it becomes zero. It doesn't become negative. So you don't run out of money before your plan time. So that's basically it for your retirement plan, so that you have like a pension income coming to you at the age of course at the age of 60 or 60 plus. Some pension income is coming in your bank account, which is worth 50,000 in today's term, inflation adjusted, right? Of course, at that time, this won't be 50,000. This will be some 2 point something lakh, 2.2 lakh or something, since the multiplication factor is 4.3, but so on and so forth. Now, coming, of course, that times 2.2 lakh is today's 50,000. I hope you understand the concept of inflation here. But this is just one time. What about, because this I'm assuming is without rent, your personal expenses, but you don't want to pay rent at your old age, right? So the house which you will be buying, right, that is expensive, that you cannot deny. So that's 60 lakh rupees ka jo tumhara, I mean, sorry, for my Hindi. So for the house that you will be buying, basically that 60 lakh will also be multiplied by 4.29 or something, right? So that's about 6 for the 24 2.4 crore and 0.3 2.4 2.6 के आसपास कुछ होगा, if I'm not wrong. I'm sorry, my Hindi comes in between. So it's about 60 into 4.29. Yep. 2.574 crore basically. Okay, so this is what you would need. Now, other fund you have gone here, assuming that you have some extra bulk for your property tax and all that you will have. That also I will tell. All my factors are covered. Don't worry about anything. So your house is covered. Your house is being paid off. You're not paying any rent. Do you need to pay rent if wherever you're settling you have paid? No. Expenses in today's terms, you have 50k for one person for standard of living. Yes, comfortable. So you are done here. And of course, there was another margin of 10 lakh, 20 lakh, for which I have assumed a car with respect to inflation that you can buy, which will be like a Tata Ultros automatic or a basic level i20 with few good features, maybe a little higher version, basically that, right? So basic car, good home, cozy home, not also cozy, good home, and a good enough retirement fund I already gave you. But now you'll be like, bhai, I mean, brother, what, this is just okay, but what about my EPF and all? You didn't even consider them. No, I have. My battery is low, so I might have to connect it soon. Wait, let me connect it now only because it's 2%. Now, please be on the line. My bad. Wait. Wanted to zoom in. Now I'm using the same app. If you have an Android phone, it will be helpful. For Apple phone, I'll try to put it in description, which is a good app if I do get it, but I do love this app in there. Now, if you're a private employer under the Gratuity Act, okay. See, if you're started before the age of 25, no, then you are at the awesome way. But what was the upper limit for this video, which I consider 39? See, you can even do it at 40, 42, 45 also. But 39 I'm taking because 60 is the assumed retirement age in India. So 39 we will take it. Okay. So last drawn monthly basic pay, let's say for an employee earning on like would almost be 36,500. Let us just take it. Dear allowance will be 0. I'm just taking this assumptions for a private employee. If you're a government employee, then even better for you. And the duration, if you're 39 and even if you started working at 25, you have already worked 14 years, right? Now they may not be continuous, but I am assuming that at least 10 years of them must have been continuous in one organization. And now also you will work 21 years. After 30, people don't shift companies a lot. This is true. Right. So let's say on an average, whenever you are retiring at 60 or so, your EPF is at least of 10 years. Okay, 10 years terms, and you have taken EPF 2 or 3 more times, and you have invested them in FDs or something safe. So we will take that because from 39 to 60 it's 21 years. So I'm assuming you shifted two companies, one at 11 years, one at 10 years. Okay, plus last 10 years you were in one company, before that 11 years you were in one company, at least at the last. And I know there are many drawbacks. I know I'm going to get nicely one hearing from all the people from the private sector, but just for my sake, consider this. So we will take 21, and by the time you'll be retiring, of course I've not taken inflation now. Okay, but I'm taking it with respect to today. So in today's term you have 4.5, or rather I'll say no, because no, it will be slightly higher if I take this as no. Yeah, you have 4.5 lakh in today's term. That is, in today's term you will have here, okay, in your GPF. And then let us go with EPF calculator. Let's say you started working in 25. For example, I started when I was 22. Some people do MBA started 24, 25. I'm taking 25 to be on the safer margin. And where is that EPF? There is a Asset Yogi. Like, I really love the way he explains everything. Asset Yogi EPF, like, it's very nice, it's beautiful, it's my heart. Like, I refer all of you to see his video. The way he explains, especially, I don't know if he has an English version of it or you can get an auto dub version of it, but in Hindi he's explained and it's very nice, very crisp. So let's say you started at 25 and your current EPF balance was 0, EPS balance was 0. Monthly pay, let's say if I'm considering 1 lakh per month, so that's with 36,000. Increase of percentage of salary is 7.18. I'm just taking inflation everywhere. 8.25 is the current rate, and retirement age is what, 60 is what I'm taking. But I will take, for my sake, 30, or okay, no, I'm taking 60, because that's the age we have assumed here. No limit on contribution. 4.4176 crore, and this is your EPF balance which you will have, if I'm not wrong. And your pension EPS will be approximately 7.5k per month. But believe me, when you're retiring at that age, this is nothing. This is like today's maybe 1,000 rupees, 1,000k max today. This is at your 60. This is at your 60. So this EPS amount we should not even count. EPF is a big amount that even in today's term is a good value. Like, even if you say 20 or more, so 1 divided 4, this is still like, in today's term, if I have to say, this will be worth like 30 to 35 lakh in today's term. So we have 35 here and we have almost 5 here, right? Because one mistake which I did, we have approximately that here. So you have, now this is again I made mostly with respect to salary. Now you might ask, I am a business owner, Shivanshu, why have you not considered us? Don't worry, I've considered. If you're a business owner, then you must have had some tax benefits where you can have lot of claims. I mean, or if you're a professional like a doctor, lawyer, that section which you can claim to get half the tax. Put that money in PPF, like, even if you don't like too much of investment shit. Then also you have that extra benefit. Of course, it's not as much as a salaried employee, 8.25, but we have a lot of taxes and other things going. So see, I believe I think Shushmita Sen or some of my actresses once said this, I don't know who it was. She had said a very beautiful line saying life is a very good equalizer. It's a very good leveler. It levels everyone, I think. So that was one of my very favorite quotes by her. Yeah, very intelligent person. So now So now this is your wait. So EPF, PF done. So now you have 40 lakh worth in today's term. In today's term with you, today's term with you for your financial uh, mishaps, like if you have an accident and all. Okay. So this is to grow. So now I have taught you how to basically how to grow your wealth. Okay, save your wealth, but I have not taught you how to protect your wealth. Now how to protect your wealth, ठीक है, wealth, this is to protect yourself, this mishap. In case this 40 lakh in today's term, how am I getting? The EPF amount becomes 30-35, your gratuity is 4.5. EPS I'm not even considering, that will be equal to 1. If you guys know, if anyone in your family is diabetic, metformin jitna, it's the cost of that medicine. So basically that I'm not even counting, that will go, it'll be like pocket change, so I don't even want to count it away into the picture. And there are many other things, but I'm not counting it because everything will become pocket change. Then I'm talking big figures, big chunk. That's how planning should be done in my opinion. Now this is to protect yourself, not protect wealth, but to protect yourself. Liquidity. Okay, very good. Now how do you protect your wealth? Now this is $1,000,000 question. The best or the easiest way is insurance. Which are the 3 insurance you should have? Term life insurance, term life with rider, with CI or terminal illness rider. Okay, this is something that I already have. I have it with HDFC. You can go for any brand you like, but have term life insurance. I'm not sponsoring anyone. I genuinely like the brand, so I'm saying. Then you can go for health insurance, greater than or equal to 10 to 15 lakh, to be very honest, lakh, with restore rider, rider and nowadays you're getting no claim bonus on almost all good brands, so this will become some 30-35, so this should be okay. This is still not enough, by the way. The X should be greater than or equal to 10 to 15 lakh. I mean, this should be the minimum. If higher, the better. The greater, the better. The greater, the better. Okay, the insurance amount. Sum insured. Okay. Term life, keep it only up till age 65. Why? There is a whole reason. I may make a video on this, but just take my word for it. A lot of companies will try to sell you for 85. Don't go for it. Take till 65. So you have term life, you have health insurance, and last but not the least, which is the third one, term life, health insurance, and finally accidental plus car insurance in case you have a car that we talked about. Iska IDV value should be at least of your real, how much you have purchased should at least be 40% of the real thing. It is expensive. If you go for this will be an expensive plan, and this should be of 30 lakh plus. This will cost you maybe max to max 1K a month. Believe me, if you're a non-smoker, of course. I don't want to comment on smoker because I know then you guys will say that, oh, or you guys and girls, sorry, would say that, oh no, the rate was much higher than what Shivanshu said. No, this I'm saying for non-smoker. This rate, non-smoker, max it will go here. And you don't need to buy a very high term insurance. Anything 50 lakh plus, anything greater than or equal to 50 lakh or 60 lakh is enough. That is enough. Okay, so now I'm sorry, this is getting very clumsy. So now for insurance, let's go with life insurance. LI, you are paying 1K per month. Okay, if you took this before 39, then health insurance you will be paying, of course, 2K per month. Accidental insurance plus car insurance is another 1K. Believe me, it's cheap in India. So you have like 5K done here. How much was your investment amount? 40K. how much is it total? 45%, 45k of your salary. Now you might say, Shivanshu, this is unreasonable of you. We have other commitments and expenses. Yes, but this is what you need if you want to retire within 21 years of your span. If you increase the tenure from, let's say, if you start at 30 and you want to retire at 60, 30 years, then it becomes much easier. Well, let's say you are determined to retire at 25, then what to do? And you don't even want to save, like, see, out of one, if 45 goes, you have only 55 to play around with. But if you're a single person, not managing a family, this is still very much possible, but that may not be the case for you. Hence, I always go by the 1/3 rule. Can you at least say 1/3? 20% is what Americans say to save, right? American textbooks for personal finance. I am telling 33.33%, and 1/3 divided by 1 by 3. Always remember, when you do this math, you can also do it by 0.33. This will become 45 into 3. Please tell me if you can solve it. फटाफट 15 5 at the end आएगा. 45 into 3 135 है ना. So 135k, this को हम multiply करेगा. I have calculated one factor, 19.57. So your CTC should be 19.57 lakh, plus if you want to comfortably retire in 21 years basically, or rather this package would be 20 lakh. And if you have 20 lakh package in your basic, if you're getting paid a good salary structure, some companies are very horrible, but if it's good, then the PF amount will also increase. So this 40 lakh which you have for mishaps, right, which I've taken, where have I taken, will become this 40 lakh will become 50 basically. So even more good level of security. And even if you don't want to keep you 50, you want to give 40, maybe 10 lakh, you can invest more in car, or you can splurge it as they have. Sorry, my bad. So this is basically the financial plan. I hope this helps at least one person. I know I went a bit fast, and maybe the scribbling was maybe a bit too much, but I hope you understand. If you're following my voice, I hope you understand